Hello and happy Friday, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup for August 9th, 2024. Ron Quaranta here with my amazing co-hosts David Brill and Joshua Ashley Klayman. Before we begin, as our usual disclaimers, please keep in mind that nothing discussed should be considered advice of any kind by the three of us, including any references to particular tokens. And then obviously everything we're discussing are our own personal opinions and don't necessarily represent the opinions of our particular firms. For everyone who's joining us on LinkedIn and X and on Facebook, if you've got questions for our amazing group, our amazing co-hosts, please do let us know. Hit us up in chat. We're happy to address them. David, Josh, another monumental week. How are you both doing?
I mean, if you told me the first week of August would have this much action in it, I would never have believed it. And I feel like we could probably talk for 3 hours today. So I wouldn't even know where to start, but I'm gonna lead it up to you and Josh to lead us on this journey today.
David, I remember the financial market days where we could think, August, it's going to be a slow trading day. Everyone's at the beach. Not so in our world, David. Let's kick off with some of the market stuff. David, I read something interesting. Monday was a catastrophic day for markets globally across equities and crypto. And the interesting data point, David, was the markets had their biggest percentage drop and biggest percentage rise within 2 days of each other this week. Talk a little bit about what happened in the markets, David, what you and I have seen and been texting about for 6 straight days now.
So I really think the interesting thing is that because Bitcoin trades 24/7 and crypto trades 24/7, crypto really ends up being, like sort of a leading indicator of where things are headed. And so you saw the volatility on Sunday in the crypto markets, and we lost like $10,000 or $15,000. And I'll tell you that I had a small order for Bitcoin at 50,000 just hanging out there just to see, because I like to just leave them out there once in a while and see. And it totally got tagged over the weekend. But the really interesting part is that it's really a leading indicator. And so you knew stocks were going to go down on Monday when you saw the volatility in Bitcoin on Sunday. But it's like we've talked about. On those weekends, you have low liquidity. You have different levels where there's a lot of liquidations if they're triggered, and you saw all of that play out. So it was really fascinating just to see. In crypto Twitter, I mean, you could feel the angst from some people, and then other people are like, "Oh, this is a great opportunity." Yeah. And so it was fascinating to see.
David, I want to get into the weeds here. Josh, I'm going economic wonk on everybody, and I'm sorry about that.
Sounds great to me.
David, I was really fascinated. Are you seeing the correlation that I'm seeing when you look at something? Everyone's been talking about the yen carry trade unwound, and I think it was something like $20 trillion was wrapped up in the yen carry trade. You've often referenced the derivatives and the options that are out there. There's almost a crypto carry trade vis-a-vis Bitcoin. Are you kind of seeing that same kind of parallel, or am I overreading that?
Well, in some ways, like Bitcoin and crypto trade like an option to begin with. Right. So I think in that way, they sort of have that liquidity and they sort of have that volatility that an option has. And then when people are trading derivatives on top of an option, it's just like exponential. But yeah, I do agree. I do think though, like today, somebody came out and said there are all these people buying options for Bitcoin at 100K by the end of the year. So there is just this swarm of liquidity around, derivatives and the movements in Bitcoin and other crypto assets. I think once we get options on the Bitcoin ETFs, I think then you're really going to see a lot more activity. And you also have to remember that we really can't trade options unless you're an institution or a high net worth person on crypto in the US. And since we are one of the largest markets, that's a wholly untapped market.
Josh, I just want to pull you into this conversation. Before I do, David mentioned that he had a small order sitting out there at 50 for BTC. Those are usually 8-digit orders when we're talking about David Brill. Josh, jump in here as well. Obviously, you and I and David text a lot about the economics of it, but what have you seen from your kind of legal perspective? And that opens up an entire conversation on, holy cow, what happened in the courts? But I'd love your perspective on some of this.
Yeah, I mean, well, I would say even before we get to the legal stuff, just on the market stuff. I mean, as you guys have said, like, we've heard from certain trading platforms, exchanges, that we should expect continued volatility. But then, as you guys note, some bulls are saying 100K by the end of the year, and that's not that far.
Yeah.
Right. So I think alongside of that, obviously, we have the continuing political saga, right? With I think I read somewhere on at least a reporting regarding a prediction market that now it's looking pretty close, at least by certain metrics between the two major candidates. So I think that's, all of these things are super interesting. But from a legal perspective, I mean, we're finally getting some answers, or at least closer to them, or at least interim answers. And one of the things that comes to mind there is the Ripple decision that just came out recently, which I think many were quite surprised, and many were probably unsurprised by the outcome. So, as those who are watching may be aware, the judge in the SEC v. Ripple case ordered Ripple to pay $125 million fine. That's opposed to the $2 billion that the SEC was seeking. So again, like, for those who've been watching at home, the Ripple case has been super interesting for the industry because the judge in that case, Judge Torres of the Southern District, right, in the Second Circuit, had said that certain sales, the institutional sales by Ripple, were sales of securities, and the programmatic blind bid-ask sales were not. I think it's expected that the SEC will appeal this case, and I think we've heard in the past that Ripple executives, correct me if I'm wrong, have said, if necessary, they would appeal all the way up. I think one of the things to watch that I've heard some commentary about, including, I'll say, by our good friend Emma Channing, who is quite wise and always full of interesting information and thoughts. One of the things to think about is, if you think about the Ripple case, and then you think about the case against Block One years ago, right, involving the EOS token, right? That had a $20 million fine on $4 billion worth of sales, right? So some think that maybe behind the scenes could the Ripple team legal team have been suggesting that a similar metric be applied with respect to Ripple. But one of the things that I think we haven't seen, although it was asked for, is the question of a bad actor designation. And definitely I see Emma commenting, in the case involving Block One, as you may recall, there was a request and a granting of a waiver of the bad actor designation. And I don't think that we've seen that here. I've seen some comments that have suggested that the judge had said that she wasn't aware of, I believe, precedent that would say that was necessary, or I forget the exact language. But yeah, so I think that's a really interesting thing, especially when we think of their ODL sales and what that means going forward.
Josh, I want to parse that back a little bit, and shout out to Emma. I think you're in trouble, Josh, for raising up, but we'll have to get Emma on the show. David, Josh, one of the things that Judge Torres, and I had read the judgment, it was really interesting for a newbie or neophyte like me from a legal perspective, David, when you see something like an injunction against future violations of securities law, that's pretty boilerplate, I would imagine, from a judgment perspective. But, for those who may not understand, what does that do to the token that as it currently stands, David? One of the concerns was, does the token go away?
No, the token doesn't go away. And there's no prohibition on secondary sales of the token on different crypto exchanges. And so I want to go back for a minute, because Josh made an interesting point. I don't think people give Lee Schneider enough credit for really the deal of the decade for EOS and getting
and Kira Nubel.
Yeah,
right?
That's right.
Yeah, for getting like a 20-something million settlement and unlocking the $4 billion of worth at the time of the EOS token. I think that really may come down to be one of the best legal settlements in our space. Maybe in sort of equities broadly, even though crypto is not equity, but so I want to just make that reference. But you know, I think that this is a really positive result for Ripple token holders, for the Ripple ecosystem. And I think that, you know, Ripple has a very strong legal team. And I think that they will find ways to compliantly, outside of the US, sell the token, you know, into institutions, maybe through an exemption, or maybe, you know, maybe there's another way that they feel comfortable making those transactions. So I think net, it's an overall positive for Ripple.
David, Josh, thanks. Emma is throwing some legal wisdom out there. I'm going to leave that to you and David to review. But David, I want to pull back some of that a little bit, if I could. One of the things, and Emma raises it here, and others have raised it as well, the bad actor disqualification waiver. But it is interesting when you read Judge Torres's opinion, and I'd love your perspectives on this. There was some commentary that the judge had put forward that felt really critical in some ways, meaning you can almost imagine, and I'm paraphrasing here, Ripple, you know, being in that gray zone and potentially in the future crossing the line. What did you both think of the tone and tempo of those comments from the judge versus the actual judgment itself?
Well, I'm going to let Josh go first on this one.
Sorry, Josh.
So I should say, you know, I have, this is with all caveats that I am not aware of Judge Torres's normal style, or nor have I read every single filing in this case. But I do think it's, there was an interesting piece that talked about the ODL, the on-demand liquidity sales, right? And whether they constituted institutional sales. And I think the determination was that, yes, in fact, they do constitute institutional sales. There was some language from the judge that referred to, I don't want to use the wrong summary, but, you know, an attempt to argue something that had already been argued. So I think what I would suggest is that as any company's lawyers should be doing, advocating for them. I think Ripple's legal team truly has done a tremendous job. And I suspect that some of the comments were designed just to say, like, hey, understand you're arguing for this, but kind of have made this determination. But overall, I think it's
agreed.
Terrific result for the company.
And Josh, go ahead, David.
So there was one other thing I want to say. Like, if you take the position that those sales were securities, you know, investment securities, and were, you know, violating Section 5. I mean, I can see the judge wanting to make sure and being very clear that she doesn't want those to continue. And I think she was very explicit about it in her opinion. So I don't read that negatively. I think that's her making sure that Ripple doesn't try to find a way to say that her ruling wasn't clear, and she was very explicit about where she was coming from. So
it was a very thoughtful, I mean, Judge Torres, and obviously a lot of the judges have had thoughtful analysis. To me, it was a very thoughtful ultimate judgment. David, Josh, you know, thank you for that. I want to weigh in a little bit on one other thing. You know, everyone's generally saying, well, it's likely that the SEC will appeal. Is that a given?
I mean, I think it's a given.
Why?
Well, I think if you as a institution, or we'll say in this case, you know, as a regulatory body, believe a certain way about how an asset is being treated, and you get a verdict that's not consistent with that, then you're going to appeal it, and you're going to, you know, try and get an audience that may see your arguments as the more persuasive ones. So I think organizationally, they will appeal it. And I think even, I would go so far to say is that even if we do have a new, you know, even if we were to have like a Republican commissioner in the beginning of, you know, 2025, if we were to see a Republican win and, you know, if Trump were to win, organizationally, even if they were to put a new commissioner in place, I don't know that the battleship moves that quickly that they don't necessarily, you know, seek to appeal that. And maybe behind the scenes, you know, there's some broader consensus about how to move forward. But I think, to me, I feel fairly certain that they will appeal.
Yeah, I think so too. I mean, if I think about what may have, holding aside any independent personal motivations, right? Just assuming good faith, right? Assuming this is not the debt box situation, right? Nothing like that.
Ooh.
I mean, I think probably the case was brought by the regulator trying to say, like, here, we're going to make it all clear for you, right? And here we ended up with a very split type of decision. That some, while yes, I totally agree, Ron, that Judge Torres has tried very hard to make as clear as possible the distinctions and the boundaries, but still, the very fact that, as we've discussed in prior, sessions, that there was the two treatments for the two different types of sales, I think that has raised questions. But I think also, as we think about these other cases that are going along, we've had Judge Rakoff in the same district determine to set aside that reasoning. Whereas, in the SEC v. Binance case, in a different district, in a different circuit, right, that judge has referred back to Judge Torres's ruling. So I think if I were the SEC, I would appeal, right, because I would want to take the chance that perhaps a different judge may take a different view.
Josh, David, thank you. Josh, let me stay with you for a minute and then pull David in. I want to ask what's probably going to be a more provocative question. I'm going right to ripping up the script. But when you look at the original requests from the regulator against Ripple, it was almost $2 billion in penalty and disgorgement and interest. And Ripple came back and said, how about 10 million? I'm sure there's a much more complicated conversation there. And Judge Torres decided on 180 something million, I think was the number. Let me ask this question. Is a $2 billion requested judgment meant to drive a company out of business?
So that's a great question. I would tend to think that asking for that would be, if one received it, right?
Yeah.
That a regulator would be trying to send a message broadly. I mean, we've seen these big numbers in other cases. We just saw with the CFTC and FTX and Alameda, a multi-billion-dollar judgment, right? So I think one of the challenges, and again, this is a testament to the lawyers who were involved in the SEC v. Block 1 settlement, is that sometimes people have said, well, $4 billion, $20 million, is that the cost of doing business? And so I think that's what regulators want to avoid. I don't think that they want there to be a final outcome where the pain can be justified for the reward.
Right. David?
I'm going to build on that. So I think one of the negotiating, I don't want to, like, tactic is a strong word, but I would say one of the negotiating postures is we're going to ask for really big fines and we're going to compel people to settle because they don't want to take the risk of, fighting the commission, paying all the legal fees, and then potentially being on the hook for a huge fines. And so I think, and we've said this many times, that there's a miscalculation of the well-funded crypto projects and the willingness to fight and to bring to bear some of the sharpest mind in the legal industry to, argue these cases and to fight back. And so I think we've talked about this before, because it's a zero-sum game. If your token is a security, and the way the liquidity is right now in the security token market, you're really blowing up the project. So it's really an existential risk to these projects, and they're going to bring their full force to bear and fighting back on these, allegations. So I think there's been a miscalculation of the, the fight that is in some of these larger projects. And I think because of the zero-sum game, you're seeing it play out. One other thing I wanted to say about Ripple is, I think that if you look at the fact pattern in Ripple vis-a-vis Coinbase and Coinbase and Binance, and maybe Kraken too to some level, these facts I think were the best facts for the SEC in any of these cases. So if the SEC wasn't able to be successful in this case, I see them winning in these other cases to be much more difficult after this decision.
David, Josh, go ahead, Josh.
I was just going to say, and also the whole idea of programmatic sales being not sales of securities. I mean, that's huge. Even though Judge Torres didn't, she expressly said, I believe in a footnote, I'm not addressing secondary sales. And yet the implications, just as in SEC v. Binance, the judge talked about that as well. The implications for the secondary market, if programmatic blind bid-ask sales are not sales of securities, I mean, those have big implications for trading platforms. I would say also that in addition to the fine, I think if we're just looking at the $125 million judgment, right? It's important to remember to get the kind of legal representation that Ripple had, right? And I'm sure the executives also had. Yeah. That is quite costly. And so we shouldn't forget that also, to the extent, that it may have been pro bono or otherwise, the amicus briefs that were done by incredible lawyers as well. And so when we think about the aggregate cost of the mind of defending an action like this, I think it's important that we also think about those costs if we're advising clients in a particular instance about what a settlement might cost.
Right. Josh, thanks so much. It was 125. I said 185 in error, so apologies to everyone in the audience who is listening. Josh, David, let's leave off. Obviously, more to come in the Ripple case if we anticipate that the SEC will appeal. For those who may not be aware, is there a kind of a statute of limitations or a time limit, rather, on an appeal? What is the appeal process?
60 days.
60 days.
So the clock is ticking.
Got it.
I certainly will be watching, and I think everybody in the crypto community will be watching. But, there's one thing I wanted to mention as we've been talking about this. After the Chevron decision, the commission has a tough road here, because if they do appeal to the Second Circuit, and let's just say for argument's sake they didn't get the result that they wanted, if they were to appeal this up to the Supreme Court, I don't think they're going to have a very a Supreme Court that's going to be very open to their arguments based on some of the recent rulings by the Supreme Court. So I think they're in a little bit of a tough situation from the judiciary standpoint on making these arguments and prevailing, just with regard to this current court and their viewpoint on regulatory agencies and potential overreach.
Yeah, David, Josh, there's so much more to cover. One of the other items that we'd seen across the regulatory landscape, we may have addressed this a bit last week, but David, I want to start with you. I had a conversation with a colleague yesterday, and they were looking at the SEC amending their the Binance case, removing certain tokens from consideration as securities. And the comment he made was, "Well, that means Solana's, Sol is not a token, is not a security." Is he wrong?
I mean, I don't think just because they removed it in that case, in the Binance case, that it's not a security.
Right.
I think that we don't know what's going on behind the scenes. You don't know until it's made public. You don't know whether people, projects, and I'm definitely not just talking about Solana. I'm just talking in broad strokes. What projects have received subpoenas? What projects, are in conversation about a potential Wells notice? We really don't know what's going on behind the scenes, because in part those filings are, those actions are confidential. So I don't think any particular token that was removed from the Binance case means that they have a clear path and they're no longer considered security. I just think for purposes of the Binance case, the SEC is just going to focus on the BNB token and has removed the other ones. I think probably at Justice Jackson's prodding, but I think that's the position they're taking. So no, I don't think the other tokens de facto are not securities now.
And that leads to some of the concerns that the three of us have had on how some of these things are broadcast through different media channels and news. It's important to know some of those details. Josh, did you want to add anything to that?
I would just say I agree with David. I mean, I think the removal, obviously, it doesn't get to the question of whether the token is a security. It also doesn't get to the question of whether a transaction involving or wrapping the token is a security. So
Right.
that's kind of like kicked down the road for another day potentially. But I really do think some of the signaling from Judge Jackson and, you know, the references of Judge Torres's Ripple decision, as well as and seeming, at least in my read, to be persuaded by that decision in some ways, as well as the decision about the BUSD not involving a securities transaction. I mean, to me, I think perhaps the SEC saw the potential writing on the wall, and particularly after this SEC v. Ripple, judgment that just came out, I think, maybe hedging its bets, so to speak.
Yeah. Josh, David, there's no way to avoid the politics conversation. We're in election season, and the three of us came out of Nashville, as so many others did, across both the Bitcoin conference as well as EDAS. Shout out to our friends at Bitwave. Great conversations, and it was great seeing you guys there. The conversation started really when you look at the Republican nominee going all in on crypto, and there was this dialogue that happened for a long time where a potential Harris administration, David, would be much more friendly, and then recently, I believe the campaign had met with industry participants. And David, you and I were exchanging some messages this morning, and it seems that wasn't a great conversation. What do you think's at play here?
Well, I was not part of that conversation,
Yeah.
so I can only go on what
Nor
is being reported and what's being shared. Look, I think Vice President Harris is having a meeting on Wednesday, a crypto town hall.
Yep.
And so I think, I don't know if she's going to be speaking or, if it's going to be more listening, but I think I'm going to try and reserve judgment till we have that town hall to at least, I'm taking an open mind to it.
Sure.
But what I will say is that what's come out of the call yesterday was, decidedly, I'm trying to think of a
difficult conversation.
I'm trying to think of a nice way to put it. It sounds like a lot of the people who represented the crypto companies were expressing their displeasure and their frustration with the current policies that are going on, especially on the banking side. And so I don't think from a PR standpoint that call went well yesterday based on what's coming out of it, but I think we owe it to the vice president to see, what she has to say or her team has to say on Wednesday when they do their town.
Yeah, agreed. And Josh, do you want to weigh in here? And we shouldn't have preconceived notions on what either administration after the election would do. And are you worried that the crypto industry's coming in a little too hot in conversations with the Harris campaign?
So I'm not privy to all those conversations.
None of us were.
But what I would just say is, as we've talked about in prior sessions, it's hard to know what's being said versus what will be done, and what is an election campaign pronouncement versus something that really will have teeth and legs and take effect. But I do think, to the extent that while we individually and collectively may have certain candidates that we wish to support or not, right? I do think there is some danger in the digital asset space all falling behind one candidate very openly. Yeah. And then if that candidate doesn't win, because I think we should just be cautious about making an enemy of a new administration, in addition to wanting to make a friend of a new administration. So
whatever administration comes in, industry has to work with them in some way, shape, or form. David, Josh, really great points. Appreciate it. I'd love to go back to something. David, if we could dive into some macro things that I've been tracking that have really been bubbling in my mind. I want to go back to the comment we had earlier where the markets had a really, really terrible Friday and then an even worse Monday across basically almost all markets, except some fixed income. And David, the concern I've had was the kind of trend of conversation that, oh my God, there should be an emergency rate cut by the Fed. And you and I know, and the three of us know, that Bitcoin and crypto in general is a risk-on series of assets. Do you think that the market needs an emergency cut? Or I guess the question really is, David, is the Fed behind the curve again?
So that's, it's a great question, Ron. So I'll break it up in parts.
Yep.
I still think the Fed is behind the curve.
Yep.
I still think, here's what really kind of troubled me a little bit, was on Wednesday, we get a jobs number that the new unemployment filings were 11,000 under what the expectation was. So 239 versus 250. But we know that every month there's, recalibrations by the administration on what those numbers really are. So if you think about it, for an $11,000 claims under what was expected, we had this huge rally. But we know in a month that they're probably a month or two that these numbers are going to be recast. So to me, that was like a little bit of a concern to me, because that's a very thin margin, especially since we know that these numbers get recast. So no, I don't think there's a need for an emergency rate cut. Now I think people are wondering if we're going to see 25 or 50 basis points next month, which is really interesting. And then one other thing, I'm going to pivot, because one thing, like when we're talking about the markets, is that both electronic trading platforms and crypto trading platforms again had a freeze up on Monday.
Yep.
And look, I'm not casting blame anywhere, but like, this can't keep happening. If every single time we have a massive volatility event, the online trading platforms and the crypto trading platforms freeze up, it's really problematic.
Yeah.
And I think progress just needs to be made. I don't know how it happens. I think technologically something has to change, but people can't get locked out of making trades when these high volatility events occur.
Yeah. David, I fully agree with you. I want to go a little bit deeper on some of the Fed stuff, and I think it's something you and I have often spoken about. The Fed has a systemic problem in my mind, and the systemic problem is that the data they ingest to make interest rate decisions is not forward-looking or even real-time data. It is all older data, and I get the complexities of accruing this data. I don't envy them the job, and I know they've got rows and rows of people and computers doing analysis. But the truth of the matter is, none of their decisions are real time, and we live in a real time world. The other thing I'm very, very concerned about is I'm going to weave the political conversation. One of the candidates has really weighed in on the executive branch should have more influence on the Fed. I think that is a terrible, terrible idea. David, Josh, am I wrong?
So I've really been thinking about this, and I'm of two minds. So first of all, I totally agree. But I also wonder if these are sort of thinly veiled comments to the Fed, not to make any sharp moves before the election that could somehow tip the balance one way or the other. So yes, I totally agree with you, Ron. But then I also wonder, like, from a strategy standpoint, are these kind of comments being made to sort of, to the Fed to sort of try and keep them in line a little bit from that candidate's perspective?
And I look, again, I don't envy the Fed their job. The truth of the matter is, historically, they try not to make major changes to policy close to an election. Chair Powell and the commission may not have a choice. The Federal Reserve Board may not have a choice between now and election day.
I have more to say, but Josh, what do you think?
Yeah, Josh, weigh in.
No, I agree with David. I was just going to say, we're hearing a lot of big statements by a lot of people, including about reforming the Supreme Court.
Oh, yeah.
So
let's not talk about that. No, there's, and I feel like, Josh, to your point, do you worry that a lot of it is hyperbole? No, election day hyperbole.
I mean, that's how it feels to me. But yeah, I mean, I hesitate to take a position either way, but I do think, some of the statements that have been made recently have been of a nature that has surprised me, no matter who's been making them.
Yeah, and then the other thing I'll say is, I'm still super skeptical about like inflation really coming down in a way that's being reported and sort of, I think if you take numbers and you slice and dice them in a certain way, you can make statistics look how you want them to look.
Yeah.
But I think everyday people, when it comes to, core things that they're paying for, whether it be, food, energy, and I know sometimes they parse those out, which is kind of funny to me because those are the two things that everybody consumes on some level.
Yep.
But things are still really a lot more expensive than they were a couple of years ago. And maybe year on year it's slowing down, but the base from where it is still really elevated.
David, you opened. Go ahead, Josh. I'm sorry.
Oh, I was going to say, I have some anecdata from Emma. I'm using her name in vain. Emma,
Man, Emma getting the shout outs today.
Maybe giving me some frowns or smiles. But yeah, so interesting anecdata this week. So 23rd floor Manhattan office building just sold at a 97.5% discount. Sale price from $332 million in 2006 to $8.5 million in July 2024. So there's a question about office occupancies and recovery and whether that may have an impact and what impact on community banks. Then another thing, the eviction lab, although it says most of their data caps out at 2018, but their 2023 report released in April has the headline of, is the 32 cities where we have complete data coverage, or of the 32 cities, 25 saw an increase in eviction filings between 2022 and 2023. And then as of August 5th, this is another just data point, which could be good, could be bad. The New York Federal Reserve said it accepted $316,246 billion submitted to its overnight reverse repo facility on Monday, the lowest since May 2021. So
my question is, did
I
Emma
put that out for your consumption?
My question is, did Emma buy the building? I want to know. Josh, thank you so much. And again, shout out. Emma, David, go ahead.
No, and did she buy it in crypto?
And did you buy it in crypto?
But one other thing I would add is, you're seeing, things, reporting about credit card delinquencies starting to grow significantly, car repossession starting to grow significantly. I still think there's two sort of worlds that are going on. And I really think that the lower and middle income wage earners are really feeling the pinch.
Yep. David, since you and I and Josh opened this macroeconomic geek box, I'm going to go even deeper. You talked about the data, and the devil is always in the details of the data itself. Two things that really jump out to me, David. One is when you look at the things like unemployment data, the majority of the changes in job structure generally, where there are additions to job, either in government or government adjacent jobs, including things like healthcare, through things like Social Security, Medicaid, and Medicare, which is a bit problematic. The other thing that a lot of people don't realize, and I heard a really amazing analysis, I think it was on Bloomberg Radio, so shout out to Bloomberg, David. I'd love your input on this. When we see the jobs data, moving an employee, and a lot of companies are beginning to move employees from full-time to part-time, that does not show up as new unemployment claims because they can't claim unemployment. So we're not at the full employment, the argument goes, that a lot of people think we are. Do you see the same kind of concerns, David?
I do, and we've talked about this before on our podcast. But if one person had a full-time job and now they have two part-time jobs,
yep, that's not a job loss according to the data.
Yeah, that's not being reported as a job loss, but I'm sure that person, is feeling the permanent job loss. And
yep.
And again, what kind of jobs? We kept seeing all these government jobs being created. And again, I don't know why we need to be hiring so many more government jobs. It seems like, government's sort of fully staffed, but be that as it may, these aren't private sector jobs. And you're seeing, high profile tech companies, laying off more employees. Intel was reported to be laying off 15,000 employees.
Yep.
And these are, high caliber, white collar jobs. So I agree with you. And maybe I took a little bit of a long-winded way in answering that, but I agree with you. And I think the data is still choppy.
David, thank you. Josh, go ahead.
Oh, I was just going to say, two questions for you guys. One is, with respect to this, all these creation of government jobs, how much of that do you think is in anticipation of the election, right? And not wanting to have data that looks differently, in one question. And then the other question that I have for you is, so understanding that, it's a look back with respect to the data that the Fed sees, how would you recommend, if you were in charge of the Fed, like what should we be looking at?
I'll kick that off, and David, back. Ooh, those are big
tough questions at
those
all.
are two big nuts to crack, Josh. So on the Fed, on the government jobs, it's very easy to go down what I'll call the conspiracy road of they're piling on government jobs to make the data look good. The process of adding people to any job is not a really short process generally. Those are requisitioned roles, those are positions that are out there, and certainly there's some push. But it seems to me to be a matter of general government policy, given the current administration, to hire for more of these positions, and over time those positions do fill. David, I don't know if you do or don't agree with that. The other question you asked, Josh, on the Fed, that's a bigger problem, I think, because the truth of the matter becomes, how does a quasi-governmental agent, how does the Federal Reserve Bank of the United States get more real-time data? I don't know the tech stack for the Fed. I promise you it's not running the latest AI supercomputers. And where and how they collect that data is very antiquated. A lot of it depends upon reporting across different districts. A lot of it has a lot of people involved at several endpoints. Bureau of Labor Statistics, David, you and I have had this conversation. It's going to require a lot of investment. And I would argue that for an activity like that, they probably don't have the money to spend on an investment like that.
Yeah, I would say, in fairness, I think the reporting is probably not as robust as it needs to be.
Yep.
And I intentionally avoided that topic that you just brought up. And I've been really trying not to go.
He left it for me, Josh.
Well, no, I think Josh makes a point. I'm not going to take that view that the box is being stacked, so to speak. I may have a certain view about it, but I'm not going to take that view. But it is certainly a possibility. But one last thing, I think also we have to remember that when there are these big weather, rainstorms, tornadoes, hurricanes, there's probably a delay in the reporting too. And so again, it's always after the fact you're going to see these numbers revised. And so that's again why I'm reiterating that this small, under the 11,000 less claims being filed and the market reacting so robustly to it, that concerns me, because we know the numbers are a little choppy. There's been, weather. That's a concerning thing, that we could see such a move in the markets off of that.
David, Josh, I do want to point out, first of all, for the audience, again, thank you all for joining us. If you've got additional questions for David, Josh, or I, please put them in the chat. David, Josh, one other thing I want to raise. This is actually a groundbreaking episode for us. I believe this is the first time in my memory that the three of us raised regulators and the SEC and court cases, and no one heard sirens in the background. I feel like we've cleared a hurdle where we don't hear sirens in the background when we're talking about regulators. Josh, I know we've got more to cover, but you've got something to add. Please go for it.
Oh, well, as we were talking about politics, and earlier I mentioned, prediction markets and estimates, we did see some interesting developments this week with respect to a proposal that the CFTC issued on May 10th, 2024, about, among other things, defining event contracts involving political contexts as gaming. So as reported by CoinDesk, but also on Twitter, one of the trading platforms submitted a letter yesterday concerning this notice of proposed rulemaking. And interestingly, this kind of ties together a number of points, because one of the things that was mentioned was that, at least in the letter, it was argued that the CFTC was exceeding its statutory authority in making this determination or proposed determination, and that actually, and it was said, by adopting a broad and it was described as a vague definition of gaming and determining that gaming contracts are contrary to the public interest. The letter suggested, among other things, that there needs to be a two-step process, right, where you really take a look at each individual contract and then you determine whether it is in the public interest. But I just think it's an interesting point because it's knitting together a lot of things that are happening in real time, including what we were talking about earlier, I think towards the beginning when you were mentioning Chevron deference and impacts, with different appeals. Certainly here, it's just, I thought it was interesting.
It's definitely interesting. Josh, David, do either of you want to approach Emma's question on the Custodia amicus briefs, I don't know which.
I haven't read them all, so I'm sure if they're the same quality that we've seen in some of the other, crypto litigation, I'm sure they were of high quality. I haven't really read them in the detail to give a great response to that.
She keeps asking hard questions like this. She'll definitely have to come on the show.
But
exactly. I propose we have her on very soon if she's willing.
Yes. I do want to segue, though, to the Customers Bank Federal Reserve ruling that came out, the order that came out, because there was something very interesting in there there's actually three things I think that are really interesting in there. But the one that really caught my eye was Section 9. And I have it pulled up, so I'm sort of looking at it and talking to you both. But what was really interesting is there's a provision in this. It's called notification of new activities. And basically any new initiative related to digital assets that Customers Bank wants to take, they need to, advise the Fed of this intention, or they have to, give notice that they want to engage in any of these things. And the one that was most interesting was the creation, testing, or launching of a new intra or interbank instant payments platform or network other than the existing Customer Bank instant token network. And so I thought that was quite interesting because basically once Signature Bank, went through its crisis and, ended up, sort of going through liquidation, that kind of infrastructure between banks and token payments, doesn't exist. And so this is very interesting that was, in this order from the Fed. And I know not everybody's had a chance to really dive into this yet, but I thought that was quite interesting.
David, thanks for raising it. Josh, go ahead.
Yeah. I was just going to say, in response to Emma's question and her further comment, I think it is very striking that the amicus briefs, assuming I'm saying that right, were filed by really very influential people. Certainly Nick Morgan, whom we had on last week, but also Paul Klayman, if I'm saying his name correctly, who was involved also in the Chevron deference, cases. And, the two solicitors general that Emma mentions, they were solicitors general for Presidents George W. Bush and Barack Obama. I think, it's great to see some influential and powerful folks beyond, the amazing lawyers in industry, right? But really throw weight behind Custodia and frankly, Caitlin.
Yep. Yeah. Worth the read. We should probably include the links to those briefs within the show notes, which we'll do when we post it to the YouTube channel. David, Josh, there's still so much to cover. I'm going to call Joshua Ashley Klayman as our witness, David. I'm going to be taking out the crystal ball against your crystal ball. And I want to predict the Bitcoin price. And I'm going to say something that's probably going to get me in trouble and make me owe you yet another dinner. End of this year, BTC at 125.
Oh, interesting, Ron. I like to hear you being optimistic, and for those following along, that would be a double, a natural double from where we are now. So I think I really appreciate your optimism.
Are you not taking that bet?
I will totally take that bet, Ron.
Right.
Wait, I need a clarifying question here.
Yes.
Is that irrespective of who wins?
Yes.
Was your answer? Oh.
Wow.
Yeah, I'm definitely, for the record, I'm definitely going to owe you both another dinner with that bet. I've fully committed to that, but I need to hear the crystal ball from David.
Well, ironically, just as we're asking this, because I'm in New York this week, the sirens are playing.
Yeah.
So, I mean, the timing is amazing. So
Oh my Lord.
I will take the other side of that trade because as much as I would like to see that happen, I actually think that once we were to get to like the $100,000 mark,
Mm-hmm.
I think that there'll be like a lot of resistance to a big round number, and like we may see it go over that quickly, but I think we would sell off from that point. So I'm going to take the other side of that,
Okay.
notwithstanding who wins in November.
Yep.
And so another clarifying question, Ron. How did you come up with that number? Was it just a double? Or
No,
was it?
I mean, it was, I want to say it was a lot more logic than I'm giving it credit for. It's probably close to a double, but I'm really weighing in with the idea that, particularly post-election, I think some of the wirehouses are going to offer to a much wider grouping of customers. And I think there will be a lot of interest, particularly as we approach year end on some of the ETF stuff. I think there's still a lot of pent up demand, and that pent up demand is waiting for clarity. So now let me dive into that a little bit, Josh, if I could. There's the ongoing political argument that if Trump wins, it'll be great for crypto. I'm not sure that that's necessarily the case. It'll probably be a little easier to do compliant work in the space. I think if Vice President Harris becomes president, I just don't think it will be as critical of the industry, or at least as silent on working with the industry. I think that bodes well for a lot of pent up demand for what I'll call high net worth individuals.
Ooh, so I'm going to unfortunately take the contra a little bit here, because I'm so supportive of like where we're going. So I've been really thinking about this a lot. And look,
Yeah.
Morgan Stanley just allowed high net worth, I think 1.5 million and a higher risk tolerance to be solicited by their wealth advisors. I think it's going to take longer to unlock the demand that exists. And I think it's going to take a little longer for the wirehouses to allow all of their clients to have access to these products. And I think maybe we see other wirehouses follow Morgan Stanley's approach. So I agree with your thesis, Ron, but I think that it's going to take longer for it to unlock. The other thing I'm going to say is that I think why people are bullish about a change in administration is that if Vice President Harris were to win, how long would it take to move the steamship, the battleship in a different direction? Because that's been the prevailing policy of this administration, to take a sort of tough line on crypto. So even if she has a different view of it, you're talking about appointments, you're talking about moving the current policy over. And again, like we're in our crypto echo chamber, which is amazing. But clearly, with everything going on in the world, like that's probably not the first thing she's focused on. So I agree with you, broad strokes. But I think the more I think about it, it's going to take longer for things to unlock.
I just want to announce to the audience that I am definitely sick and tired of losing these wagers to David. And per Sonia's comment in the chat, shout out to Sonia, who chairs our enterprise working group. That might literally be the last prediction I make publicly that gets me in this kind of trouble. But David, Josh, we've got a little bit of time. David, when you jump on the helicopter that takes you to the airport to fly back to the compound, what are you going to be looking at in the upcoming week? We've got some economic data coming out. What's kind of on the desk right now for you?
Well, first of all, between work being very busy and all of these cases and other things going on, I think I want to try and give my eyes a little bit of a rest. But I think I'm really gonna look into where the price kind of goes through the weekend, and there are a bunch of technical levels that are, are we gonna have a lower high and a higher, a lower low on a weekly basis and things like that I'm going to be looking at. I'm really going to reread the customer's bank order because I think there's a lot in there. And I would add that I had a conversation with Doug Landy, who's a partner White and Case, and we were talking about some of the other rulings in that order. And one thing I think maybe next week we'll dive into is there are a couple of things in that order that are very difficult for customers bank or any bank that banks crypto companies to comply with because of the way the nature of the privacy part of our ecosystem. To have the in-depth data points that are being asked for in this order, it's sort of this thing between privacy and AML, KYC, and those rules. So I think I'm really going to think about that some more and dive into that. And then obviously I will be watching the Jets' first preseason game and our Olympic gold medal game in basketball, which should be really interesting after we almost lost to Serbia the other day.
Oh yeah, David, thanks. Josh, as you at the compound somewhere in New Jersey at a hidden location, what are you going to be focusing on in the coming week? What's on your desk?
So I would say, as David noted, things are very busy now. I mean, even clients in Europe, where often is a quiet month, it's not a quiet month. And I think a lot of folks are looking into, if they haven't already, how the implementation of MiCA will affect their operations, whether they are releasers of tokens or whether they are trading platforms. I mean, I'm talking about everything from white paper requirements to grandfathering to decentralized systems and whether something qualifies. So I think this is something that I'm looking at very closely in a number of areas. But I would also say there are some really interesting launches that people are trying to get in place before or in connection with the election.
Yep.
If possible. So I just think it's going to continue to be a very busy time. And I see that Sonia put in the chat the reference to the September 10th date. So yeah, I mean, I think there's so much happening. I plan to do reading as usual, but I think a lot of it is just really helping clients. But what about you, Ron?
Yeah, there's a lot going on, Josh and David. September, and by the way, to the debate point, I'm not making this wager, but I wonder whether or not they'll have crypto come up in the debate at all. It will be interesting to see. So there's a lot going on, Josh, and I appreciate it. A couple of things for everyone who's out there. We have an upcoming webinar we're working to get on the docket. So those of you focused on accounting and tax, the IRS's 1099 DA final has come out. Changes some things for the better, doesn't help on some other things. So we're going to be having a webinar open to the public for that, as well as a webinar on broker-dealer reporting rules for crypto, which I think is really, really important, including the fact that a representative in the House, whose name escapes me, put forward proposed legislation pushing back against the broker reporting rules. It'll be interesting to see where that goes, and it's so impactful for the industry. And then for the audience out there, I'm giving you all the pre-release info, but we will be publishing this on Monday. You will all get to see Josh Klayman, David Brill, and so many other colleagues on the afternoon and evening of October 24th of this year for the WSBA Crypto and Blockchain Summit 2024. We've got a lineup of great speakers at a great venue right near Grand Central. There are a block of tickets open for the public that will be available. We'll have a lot of members and speakers there as well. David, Josh, myself, Phil Berg, Annalise Osborne, author and now Chief Business Officer over at Cadena. So it's going to be a great event. More panelists coming, which means that's my weekend and night work between now and October 24th, Josh. And in between there somewhere, believe it or not, I'm going to be on vacation with my wife the week after next.
Well, when I heard about those two yachts colliding, I was looking to see if your name came up.
I was, I wasn't on the bridge. It was a little frightening, Josh. But yeah, it's about time someone threw the yacht joke back at me. I had that coming.
Do you want to tease who one of the sponsors is for, or the main sponsor is for the summit?
Well, a couple of the main sponsors. Shout out to our friends at the Alternative Investment Management Association, who will be an event sponsor for us. Thank you, Michelle Noyes and the team over there. David, can we say it?
I wouldn't say it till it's until the ink is dry. I won't go with that one, but I will say that I would say there are other companies that are interested in sponsoring the summit too. And so
we'll be publicizing the full. Yeah, we'll be publishing the full sponsor list. A lot of great companies that are going to be involved. Last thing I'm going to mention about the event, Josh, David, sorry that I'm yammering on about this. Our friends at Global Legal Insights are dedicating 30 hard copies of the textbooks that Josh and David and so many of us in the WSBA contribute to every year. The first 30 people who register get a free copy. It's big and it's worth it. It's kind of a reference guide. And I'm working on having some copies of Annalise's great book available for participants who join us on the 24th as well.
And I mean, just so those who are listening know, how does one register?
There is going to be a public link available on LinkedIn. There's a link available on the WSBA website. If anyone's got questions, email us, info@wsba.co. There's going to be a public blast out for a lot of this. Corporate and individual members, Josh, already have the emails inviting them. So yeah, there'll be a big marketing push, and events are hard work. I'm just going to say that.
Yeah.
Josh, anything else you guys want to leave off with, David?
I'm just licking my chops at where we're going to be going by the end of the year on this bet we've just made.
Yeah, and I love it. I don't even have to have any skin in the game. I could just, I can be the witness.
You just get to be there, Josh. I don't know. I'm like having visions of Porterhouse in the Time Warner Center or Pierre Luger. So,
for the audience who may not know, David will not eat out a dinner unless it's a Michelin-rated restaurant. So I'm in a lot of trouble.
When it comes to steakhouses, I like my steakhouses. So, yeah, no, I'm really. I'll have to think of a list. I'll have a top 5 list for you, Ron, so you can.
You are way too. You are way too confident that you're winning this wager, David. Way too confident.
Well, Ron, I mean, if you win, it's not going to matter who pays for dinner.
Oh no, I go Michelin star as well.
I'd be like, dinner.
We'd pick the same place is probably the issue.
Well, you see, the good thing is, Ron, like I can't really lose this in a way because I either win because I'm right, or I win because we have a 2x from here. So I feel like I'm in like Josh said. Josh just said it. I just put it another way. So yeah.
Josh will be joining us, so we should give her the opportunity to pick where this wager gets completed.
Oh, you guys don't want? No, I'm gonna defer to you. But I just say this for the audience. Remember, this is all in good fun. Nothing is investment advice.
Not investment advice. It's not a restaurant recommendation. It's not a BTC price recommendation. It's all in good fun, and I'm probably in trouble. David, Josh, it's always great to see you both. Thank you to everyone in the audience who joined us. The recording will be available on LinkedIn and also be on our YouTube channel soon. I hope some of you can join us for the October 24th event. Josh, David, have a great weekend. We'll chat again soon.
Thanks, everyone.
Bye.